this chart looks specifically at building materials, so things like cement, for example. And what you can see is the prices for cement are now down by 50% over the course of the last 4 to 5 years. Now, there's obviously a very specific reason for this. That in 2020, the government drew these three red lines, or metaphorically, I suppose, but said that real estate debt is going to be controlled. And since that process, property activity has slowed down very dramatically in China. And we've talked about this sort of endlessly, really. Like a bit like demographics are a big theme for the economies overall. A specific theme for China that you can't really escape from is the fact that property market activity has slowed dramatically over the course of the last 5 years or so. And again, cement prices being down 50%, housing starts are down by 70%. Like, it's all very much related to what's happening with property. So this isn't really about oversupply. This is about a lack of demand. This is about a lack of aggregate demand that's pushing down prices in these sectors of the economy. And again, when you look at profitability in China, I talked earlier that profitability in the downstream manufacturing sectors is under pressure. Actually, the big reason why overall profits in China have fallen is because of profits falling in the upstream sectors, which again is precisely these building materials, the metal sectors, the mining sectors, all of these industries which are most closely related to what's happening in the property market. It's there that the downside pressure on profitability is being greatest. And so again, why is this important? It's important for one reason, because it's unrelated to excess investment in the manufacturing sector. So focusing on involution in itself is not going to solve this problem of deflation in cement, for example. The other reason why this chart and this sector is important is because this kind of campaign against excess competition, it's not the first time that China has done something like this. If you remember back in 2015 and 2016, there was a big campaign called supply side reform. And supply side reform was aimed at ending excess investment in some sectors of the economy. What was the target sectors at that time? The big target sectors were precisely cement and steel and these upstream sectors where prices now are falling so rapidly. And so, what's the kind of significance of this? It's obviously, this was tried once before, only, 10 years or so ago. And those very sectors which were targeted 10 years ago, prices are now falling very rapidly. The government now is focusing on, excess investment in some of these other downstream sectors. Like, should we really have a lot of confidence that these measures are going to stick and these measures will have effectiveness when 10 years ago, that very obvious campaign that the government had, it doesn't seem to have had a lasting impact. And the reason it hasn't had a lasting impact is obviously because demand has changed so rapidly.